Hey, what's going on, everybody? Welcome back to another video. In today's video, I want to go over USCL. This is the Global X Enhanced S&P 500 Covered Call ETF. There's been a bit of chatter about it lately. Some people have been selling out of it. Some people have been wondering what's happening with the performance. So I just kind of want to dive into it, talk about it. Personally, I do have a big position in it, and I will not be selling out of it. I want to talk about why, what's happening with the distributions, and we can kind of look inside of this ETF a bit and see what's been going on with it. As always, guys, nothing here is financial advice. I am not a financial advisor, but if you go ahead and hit that like button, I would really, really appreciate it. So USCL, guys, basically, like it says, you're getting 25% leveraged exposure to the S&P 500, and then you're getting a covered call strategy. You have Global X utilizing their option strategy on up to 50% of the portfolio, bringing in a current yield of about 12.5%. Now, this is just the main page of USCL, and you can see here the risk rating stands out medium to high. One thing I noticed with USCL is that back in August, Global X changed a bunch of their ETF risk ratings, and USCL was one of them. USCL got changed from medium to high risk. Okay, so they just dialed up the risk rating on it a little bit. Just something to point out with USCL. Talks about their strategy using the leverage to enhance growth potential and yield. Again, guys, I like this ETF because you have diversified exposure to top US companies. You have a covered call strategy, monthly income. Now, stable monthly income is what a lot of us are looking for. And I feel like that might be what has some people spooked with this ETF. I want to look into that. But net assets sitting at just under 250 million. So you got a healthy AUM, management fee of 0.65%, management expense ratio of 1.65%. And their most recent distribution is what we're going to look at, 24 cents and a 12-month trailing yield of 12.92%. So you've almost got a 13% yield here. But what they show us is the portfolio investment metrics. Global X actually every month they unveil their options metrics. So they actually have a spreadsheet here. So you can see all the different ETFs, and we see USCL at the bottom here. Now, USCL, it's going to show the same thing on the other page, but they're covering 48.62% of the portfolio. Now, that yield from the options is almost 10% with a dividend yield of 1.36% for a total yield of 11.31. And that's what this will show us here. Again, they just kind of flash it up on the main page, which is nice. But when we look at that 11.31, there's a discrepancy between that 12.92. So the yield has some discrepancy, and I have to wonder, is that what's happening with the distributions? Because again, guys, we look at these distributions for 2026, 24 cents monthly. But 2025, we were at 24 and a half cents, and actually at the beginning of the year, 25 and a half. So as we look over the last 12 months, we see that distribution slowly getting chipped away. Now, I have to wonder, are they paying out more than what the yield is that they are generating? Are they grinding the NAV down and they have to start, cutting those distributions back? I'm not too sure on that, but you can see clearly looking at the web page a 12.92% yield, and the indicative yield is 11.31%. Now, I did plug USCL into the total return calculator up against another popular S&P style ETF, income focused, HYLD. And USCL is still outperforming HYLD. Of course, there's going to be some discrepancies with holdings, and USCL doesn't do currency hedging, right? So there is some discrepancies there, but I think that's also why a lot of investors like to hold both. Personally, for me, I hold both and I like both. What I've been noticing is looking on the charts kind of on a daily basis. If you look year to date, USCL is down 0.74% on the NAV, and HYLD is down over 2.5% on the NAV. Now, I notice as you change kind of timelines, these numbers change. 4.3% weekly, and USCL down again 0.87% weekly. But daily, I notice the fluctuations are much different. Some days, HYLD will be up a lot more than USCL. And then some days, like today, things are still in the red, but USCL is a lot less red than HYLD is. Personally, guys, for me, I like them both. They do hold a lot of similar stocks inside. I think there's a good combination to hold both of them. That's why I do, and that's why I'm not planning on selling. Now, I am keeping an eye on USCL as far as these distributions go because we can see, as I showed you with the charts, 2025 until now, that distribution has been trending downwards. Now, something to keep an eye on. There's nothing to say that it can't come back. You know, these distributions do fluctuate. It's pretty normal, but again, HYLD, they never cut their dividend. USCL has been slowly reducing it. So let's just see what the next few months bring. The market's had a ton of volatility lately. I mean, you can see the S&P 500 just the last week and month has been totally just wild swings for it. So I'm keeping an eye on things. I'm not selling USCL. I think that there is a good complement with HYLD to keep them both together. That's my personal opinion. Let me know what you guys think. Let me know what you guys think about USCL. I know nobody is crazy when distributions get cut back, but we also want these funds to be sustainable. So let's see what happens in the coming months with USCL. Anyways, guys, I hope everybody has a great week out there. Please do me a favor, hit that like button. I'll catch you guys.